for today, Wednesday, December 15th. And having no one signed up for public comment, we'll move to the approval items right away. And then item 1, and we'll start with Mr. Singletary. Jeffrey, you're up to bat.
I'll fill in for him. Mr. Bridges. Jerry Bridges.
Okay.
If you guys will look, y'all have a report that's in your packet, which is basically our annual marketing summary. And this report is consistent with how we presented it probably for the past 6 or 7 years. But as you'll see in the report, in 2021, we spent, as a joint water sewer, $206,693 on workers' compensation. And we went out and got proposals again this year, and we had 5 insurance companies offering options for us. You'll see that the low bid is a new carrier, is Berkshire Hathaway, also known as National Liability and Fire, and their quote is offered at $203,464. Zenith, who has been our provider for the past 11 years, is at $253,402. The variance in it is really just the Berkshire Hathaway company taking an aggressive shot at earning y'all's business and providing workers' comp coverage for the joint water sewer. The question may be asked, are they buying our business? I don't think they are. In workers' comp, you basically pay for how you perform. So if we have a rough year next year, yeah, they would probably raise their rates. But if we perform well outside of the experience mod, which is not attached to the rate structure, I'd be real confident that this could be a very long-term new home for us. I'll also add that the broker that I used to obtain this quote is a gentleman by the name of Bob Seville Public Entities, and he is who partners with Fred McGinney on the property and liability insurance program for the joint water sewer. So he is familiar with the operations, familiar with this organization, and that gave me confidence in that option as well. I'll point out, if you look below the variance, and the 2 best options is $49,938. Our experience mod is increased by 1 point. I would expect it to go up again next year due to our loss history. And in this year, we have had at this moment in time, $362,186 in total incurred losses. So it was kind of a tougher year in performance, and I understand why Zenith actually raised their rates, but we were blessed to have this option as well with Berkshire Hathaway on behalf of the joint water sewer. Any questions on the first page?
Jerry, this year's up so much. I mean, is that really a huge outlier, or what like our 5-year average be?
Claim-wise, if you flip on the next page, you can kind of see claim performance at the bottom. It's under the historical loss analysis subheading. And you'll look in the 3rd column to the right. You can see how we're performing not only in dollars, but in numbers of claims. And then you can see premium and what loss ratio is. And loss ratio is a defining metric in the insurance mechanism where it's losses divided by premium. And typically if it's above 60%, the insurance company has a close eye on it and they are losing money in that arena. This page also shows some charts with our historical costs. And really 2021, outside of 2022, if we make this transition, again, some of our lowest insurance premiums that we've paid on the size of our payroll in the history of the joint water sewer. Now some questions might be, let's compare the 2 carriers. So on the next page, the final page of the packet, there's some comparisons and some comparables. As you'll see, National Liability and Fire, Berkshire Hathaway is A++ 15. So as our job as being your insurance broker, we don't have any concerns about their financial status. Very strong, actually a larger company than Zenith. They offer monoline workers' comp, meaning they only do workers' comp in this sector, but we will be leaving a 13-year relationship if we make this transition. The loss control rep for Zenith has always been out of Atlanta. His name is Mike Rippenhoff. We would now have a new gentleman out of Montgomery, Alabama. And this group also works with numerous municipalities. I'll have some examples at the bottom, and also some water sewer authorities. So this is not a company that is just dipping their toes in a new arena. They have some experience and skill set working in this type of risk. These site visits have been quarterly with multiple conference calls with Zenith. We'll possibly have annual site visits from loss control reps from Berkshire Hathaway. Jeffrey and I will also encourage them to be here more times than that, right? But at this point, all I can guarantee is one visit. And then the adjusters, we've had an assigned adjuster relationship with Zenith. We will try to request an assigned adjuster relationship with Berkshire Hathaway, but we cannot guarantee it at this point. They may work a kind of a rotation of adjusters on the account. From the risk management portal, the Zenith program has been online for a while. We've used it. We kind of deemed that that was worthy of about a $15,000 expense. I know we've used it some, but they offer, the other option offers J.J. Keller, which is the Berkshire Hathaway sort of, they've got training videos and other tools that we can dial in with Jeffrey and y'all's team at utilizing. And then they have various self-serve resources. Finally, the defensive driver training, Zenith has typically done that here annually for us. I would say that Berkshire will offer a more of a watered down version of that. It can be online. I have talked them in where I think they could show up and do one training session, but it won't be to the extent that Zenith provided it and bought lunch for the team and all that. And the final thing down all the way at the bottom, these are municipalities that Berkshire Hathaway currently insures. I thought it was important for you guys to understand what else they're involved in. And this was straight from the underwriter and broker that we dealt with. So these are some examples of some other municipalities they work with currently.
Okay.
Questions, concerns?
So your recommendation is move to Berkshire Hathaway as is?
Yeah, I mean, I like the long-term relationship that Zenith's had, but I mean, it's your money. I don't want to spend it, and it's $40-something thousand is a pretty big variance. I think if the variance was 10 or 12, then I think we have a more serious conversation about it. Zenith is not going to bend any more on their pricing. This was their best number. We ask for that every time up front.
Sure.
So it's not like I have any more negotiating on them. They have a year of $362,000 in losses that they've incurred, so they're not going to budge much. If you ask me outside looking in, I think the price probably in a fair market would be $245 to $250, but I think this is a great option that we have with Berkshire Hathaway. They've got experience in the municipality water sewer authorities, and they're a big, powerful, strong insurance company.
I will say last year, Zenith came in about $5,000 over the low bid. We elected to maintain with Zenith because it was very close, but $49,000 is a sizable gap.
We probably wouldn't be having this conversation if we had a better year of performance.
Right.
It's just Zenith has been pretty good, and I think this is the best, the most aggressive they'll get. So, outside looking in, I'm not concerned with the transition for y'all. It's Berkshire Hathaway. If it was a company that I was a little worried about, I'd be honest and upfront with you about it, but they're a strong insurance company, and I think because they've worked in this space before, they'll handle your needs. They won't be the same as Zenith, but none of the insurance companies would be if we make a transition.
Well, I'll make a motion that the Finance Committee recommend the full commission approve the purchase of workers' compensation insurance coverage with national liability and fire for policy year 2021-22 in the amount of $203,464.
I'll second the motion.
Okay, motion and second. I'll offer a few comments. I looked at it too, and I certainly support the change. It's a almost $50,000 value that we can perhaps apply a different way. One of the things, Andrew and I chatted a little bit before the meeting earlier, actually this morning, about it, is that we have opportunities to improve in our operations and our safety performance. And one of the things I've recommended on driver's training, since we have enough boo-boos there, and most of them are other people can't see a big truck, so they wind up hitting it, is I worked for a company that had a lot of big trucks, and we used two big companies use the Smith driving system, and I don't know if you've heard of that or not, but it was...
Is that a training program, or is
it
that
is
more telematic based, or
no,
GPS?
typically what had happened in the past was we would have someone who became a certified trainer, if you will.
Yes, sir.
They took the course to become certified, and then they could deliver the program. And that way our own internal folks would deliver it to the employees. And I saw that work very, very well at both these large utility companies as they deployed it. And it generated very positive results. So it's hopefully when you and your team look at that, perhaps it's a fit. But it's an opportunity to improve our performance as drivers. And then, of course, the other part on personal injuries, we perhaps need to improve our observations on that. There's a whole nother program to look at that opportunity, and I've committed to participate with the Safety Council to lend my thoughts and experience there. So, but in short, I think this is a good move for the utility. And any other questions, comments?
I think also that it is a good move. And the thing about the adjusters being assigned versus various adjusters, I'm very comfortable with that. I think it's fine to have a different set of eyes on things from time to time. So I think that's not a negative at all, but I think it's a very viable option here for us, and I think we should, I certainly am in favor of it.
I'll call the question. All those in favor, show of hands. All right, carries 3-0. Thank you very much. Appreciate it.
Thank you.
We'll move to item 2. That's the minutes for our last meeting of the 17th.
I'll make a motion, we approve the minutes as presented.
I'll second the motion to abstain from the vote. I wasn't here.
Okay, motion is second. Those in favor? Okay, carries 2-0, 2-4, 1 abstention. Thank you. Item 3 is the funding agreement for USGS monitoring project.
Yes.
Andrew?
Yes, sir. We do groundwater monitoring for saltwater intrusion into the upper Florida and aquifer for migration of chlorides towards our existing well sites. We have had to shut down the Perry Park well in the last 5 years due to the intrusion. This is real-time monitoring with USGS plus yearly or quarterly sampling they come in and do. You can see our contributions have changed throughout the years based off the amount of work they've done for us. Went up a little bit last year when we added the Ridgewood well site to the monitoring, and this year there's another increase. This increase is due to increasing cost on USGS with their ongoing services. This is budgeted in the Office of the Director's Technical Services budget, and the annual amount for the upcoming year is $70,100. We went over this at the Facilities Committee, but the plume is a T-shaped plume that does tends to stay near Brunswick Cellulose and Pi Nova. However, we do monitor that for our water planning purposes. It has not been migrating in the last couple of years. However, it's something we want to keep an eye on should it start impacting any of the wells we have close to that plume.
Chair will entertain a motion.
I'll move that the Finance Committee recommend the full commission enter to a joint funding agreement with USGS in the amount of $70,100 for the continuation of groundwater monitoring in the upper Florida and aquifer.
I'll second that.
Okay. Commissioner?
Yeah, Andrew, I know we talked about this, a while back when Mr. Junkin was here, but thought we, consider trying to see if some of the other industries would help support this. I don't know if we're talking to the county. I mean, the reality is we're not the big water user in the community. I mean, our water is, even our entire residential community that's on our system and commercial community that's on our system combined is a fraction of what some of these big users are. It frankly probably costs a plenty. I don't know, the county or somebody could, lean on them to help support this, but really the reason we're having to track this is because of the large industrial users.
Well, I will say Jekyll Island has a separate agreement for their monitoring purposes for their drinking water, and then they've also been in communication. The Development Authority is considering making a separate agreement as well to contribute towards that. We have sent requests to some of the other large users, and to date, those have been unsuccessful.
I don't know if we're kind of, if there's something the county could do, a regulation or something, to say, hey, look, anybody in the community draw an X amount of dollars, but just pay or something, or X amount of gallons. I know back when the guy before Jimmy, what was his name? Swan was here. I mean, he sent the hospital a letter asking for the hospital was a fractional. We're dropping the bucket compared to, I mean, we're using, I think, less than 100,000 gallons a day to be able to reach what we need.
Right.
Which is ultimately what's sucking the plume that way.
Absolutely. Can I ask you a question? If it's a possibility that in the future we could end up having to shut down another well,
The chlorides are monitored to see where they're at. If the chloride concentration exceeds drinking water standards, we would have to shut down the well site that would be pulling in that area.
Right.
Now, luckily, our system is very distributed, so we're staged to handle that, and that's another reason we're also locating wells in the North Mainland away from deployment.
Right, that's the thing, is that really the impact wouldn't be major, it would just be an adjustment of the way
Operational
things-
adjustment, yes, sir.
Operational adjustment, okay. And what about the cost will probably go up again if we do convert this fire well over to a regular,
Potentially, but also that depends on how many other joint funding agreements they can sign.
right, got it, okay.
Final comments and questions, please. Hearing none, show of hands in favor. Okay, passes 3-0.
Kind of question on that particular the water that we use from Academy Creek, I mean, the water that we're dumping back into the marsh, I mean, that's considered clean water, right? I mean, at some point, I know, I mean, is there an option for some of these big users to use some of that water? I mean, instead of us dumping it in the marsh, so.
We do have,
For their gray water?
we do have reuse capabilities at Southport. We're not permitted for reuse right now at Academy Creek. But
I mean, like
yes,
Pine I mean, they're using the water for cooling, I guess, water
right.
down.
And so certainly in other areas, that is becoming a bigger deal. So we have actually, we get RFIs from economic development opportunities that have requested access to that. And we've got preliminary costs for what that would take. But obviously to make that level of investment, we're gonna need a guaranteed customer.
Right, well, that's why I was thinking, like, I know they, they ship their, their wastewater to us.
Right.
So, there's a pipe coming that way. I mean, obviously the pipe could flow both ways, but, I mean, we're using, 6 million gallons a day, or just,
6 or 7 million gallons a day, depending on the day, yes, sir.
I think they're using like 30 million, so I mean,
I know there's about 15 million a day.
so we're cleaning 6 million gallons of clean, fresh water.
Right.
And they just need it for cooling instead of them pulling it out of the aquifer, because they, use 6 million of.
We'd have to look at our pricing structure to see what would make it competitive with their standard withdrawal out of the well.
And give it to them. We're just dumping in the marsh.
You gotta pay.
Well, we have some,
No, they have to pump it all, I'm just saying.
yeah, we have some pumping
Pumping, treatment, and
pipes
infrastructure
that have to be
calls.
installed.
No, I'm saying let them cover all the capital costs.
Oh,
I mean.
okay.
Yeah, I'm not saying give them
Andrew, what would be the threshold of time if we had an interested customer for reuse to get through permitting? I recognize there's construction costs depending on how far away it is, et cetera, but to get a permit out of Academy or Dunbar.
Currently, with the way things are going in Atlanta, probably 6 to 9 months to get a permit.
Okay.
Dunbar would be a whole lot easier than
on the island. It'd be easier to get water from the island all the way to Pine
No.
Island.
No.
It'd be easier to
Just-
get reuse on
just
the
a
island.
permit.
Oh, yeah, I meant.
Because of the type of thing.
Type of thing.
Right.
And Southport would be the easiest.
Southport, we've already got technically permitted for 500,000 gallons a day of reuse.
But there's no big industrial.
We just don't have any customers down there. It can be used for irrigation as well.
Right, for like golf courses or
Golf
something?
courses,
I know the GP Sailors are big ones though, right?
Yes, combined, they use 40 to 50 million gallons a day.
And we're dumping 6 back into the marsh with clean water. And I see why they couldn't use that cooling GP Sailors, not that far from the plant.
No, that would be a very easy one. We could actually go through the back gate there, not even have to get out through the cemetery.
Right, that's what I'm saying. I think worth exploring at least. And,
Sure.
maybe the map just isn't there. I don't know what the map looks like.
Okay, move to item 4. Ms. Roberts, you have
Thank you, Mr. Chairman. Congress has appropriated funding through the ARPA Act for a new emergency water and wastewater financial assistance program. State of Georgia received $37.1 million of those funds. Those funds have now been given through the Department of Human Services to local community action agencies. Those community action agencies will then determine the eligibility of households based on program parameters. Any approved households will be eligible to receive funding for one or more of the following items, whether it's arrearages for disconnected households, arrearages for households at risk of disconnection, reconnection and late fees, and or a reduction in rate charges for current bills. Once again, that's through the community action authorities. We have partnered successfully through JWSC with the Coastal Georgia Community Action Authority previously. That would be the local contact for these funds. So in order to participate in this program, the Joint Water Sewer Commission needs to sign an agreement with the State of Georgia Department of Human Services, and that's the agreement that has been submitted for your consideration.
Okay, the chair will entertain a motion.
I'll move that the Brunswick-Glynn Joint Water and Sewer Commission Finance Committee recommend that the full commission approve the low-income household water assistance program agreement with the Georgia Department of Human Services.
We'll say there is an existing program like this for electricity that Community Action Authority is already administering. So this would just be allow that program basically to be expanded to water.
So the agency will determine eligibility and select the people.
All we have to do is they come in and ask us about it. We refer them to Community Action Authority. Community Action does all the behind the scenes reviewing the finances and eligibility, and then they tell us how much to apply to their account.
And this has the potential, obviously, to reduce the number of shut-offs we do. And
Not only just number of shut-offs, the one real key benefit of this is those people that are on payment arrangements that qualify for the program, they can get their entire past due balance paid off.
As long as the account is still active.
As long
It's
as
been
the account's
actually
still
referred to
active.
collections, it's no longer eligible, but yes, sir, as long as it's an active account.
and
Do
how
we
long?
know the potential, I'm sorry, do we
How
know the
long
potential
before
impact?
we pass it over to collections?
60 days is when the shut-off occurs. Another 60 days after that is when the referral to collection occurs.
Okay, thank you, I'm sorry.
Do we know the scope or quantity of dollars we're talking about that would be
No, sir,
beneficial?
once again, because it's based on eligibility, so it's difficult for us to determine those dollars. But I can tell you anecdotally, we've already had several inquiries about the program. Mr. Rose even mentioned in another public meeting that he attended recently. One of the officials was asking him when we would be starting the program, so there's definitely interest in the
How many
community.
people we have on payment arrangements for us now?
Roughly 150.
So, I mean,
Okay.
you would assume a lot of those individuals would qualify for this program.
Mhm.
So,
That's the same organization decides what to, like, if people raise a bill.
Right, for our customer assistance program.
Yes, sir.
Exactly, but our customer
We have some
assistance,
people are getting that, right?
we have people that get that, but our program doesn't apply to arrears accounts.
Okay.
So this will allow them potentially, and they're capped at $300 with that, versus here they could get whatever their balance is paid off.
Okay. Other questions or comments?
Did have a virtual meeting, utility leaders, statewide, Department of Human Services went through this with everybody, and this program is going to get a lot of traction statewide with all the utilities. As soon as they started talking about this, everybody's like, well, where's the agreement? We need to get that signed immediately. So,
Sure, absolutely.
Last chance, comments, questions, gentlemen? Okay, hearing none, all those in favor, show of hands, please. Passes 3-0. Thank you very much.
thank you, Mr. Chairman.
And then discussion item is our monthly ending statement for November.
Thank you, Chairman. Before we get started on this, I would like to take a moment and say thank you all for your service at the Christmas luncheon. That was greatly appreciated. Thank you. Our first item is the balance sheet, and this is a corrected copy. For our current assets, we have cash and cash equivalents. We're at almost $5 million. We did receive a drawdown of GFA funds during the month of November. That was a little over $2 million, almost 2.1, so that raised our cash up. Our accounts receivable balance is 1.557. That is down $74,000 from this time last year, so we're good there. Our inventory is up just slightly, and a portion of that is meters for stock, the new Neptune meters. Capital assets, our fixed asset depreciation has been run, so that is a correct number for depreciation. Our assets are down a little, but that is the depreciation and some disposals. If we move down the page to current liabilities, our accounts payable balance is up 2.2, and most of that, or well, a big portion of that is construction pay apps. On down at the bottom of current liabilities, our short-term portion of debt, that is 2.1. Our final payment of the back-ons was made on November the 18th. So that lease is complete. They are ours. We're waiting on the titles to come in, so.
And what's the life of those vehicles?
Well, actually, what we're looking at now is potentially, it's a 5-year lease program, maybe a situation where we can trade those in and get new ones for similar value with what's going on right now and redo the lease program for a much lower cost than what we are currently paying. So we're looking at trying to rotate those because if you have to buy a new one, it's about $350,000. So always get them renewed every 5 years may be a better approach for us.
Okay.
All right, if you turn to page 2. On our total liabilities, for June 30th, we're at 46.8. On November the 30th, we're at 64 million, and that is, most of that is due to the bond issuance. Any questions on the balance sheet? Page 3. Our summary revenue. We are at a net operating revenue of $719,000. As of November the 30th, 2020, that number was almost 1.9 million. So we're doing very well.
Where are you at again? I lost it.
Summary revenue, page 3, far right, middle of the page, net operating revenue.
It's 719,000, kind of center of the page, under budget.
Okay, I'm with you.
All right, so last year it was almost 1.9 at this time. Back up to our operating revenues, up just a little bit. The other income, we're at over budget, $240,000. A portion of that, $104,000, is loan forgiveness. So I think we are eligible for $750,000. As we get that loan forgiveness, we have to record it as a revenue. So that's $100,000. Our rental income for the former CVS, that's another $33,000, and some damage reimbursements, $36,000. That was unbudgeted, unplanned. At the bottom of the page, under capital improvement fees, so far $537,000. This time last year, we're at $513,000. Any questions?
We're already tracking ahead of last year.
Yes.
Okay.
All right, page 4, expenses. Again, net operating revenue of $719,000. Our purchase orders are a little over 1.3 million. Just a little summary of those. Capital assets are $367,000. They've went ahead and placed the orders for these because there is a supply chain issue, lead time, things of that nature. Maintenance contracts, we have a $97,000 PO for that. Infrastructure repair for manholes and paving, that's another $155,000 purchase order. Electrical repair for the influent VPDs at Academy Creek, that's $92,000. So that makes up a portion of that. I will give you an update on our group insurance. We are currently at expenses $696,000. We have budgeted $752,000. So we are currently $56,000 under budget for that. But we are above where we were this time last year. Last year, at this time, we were at $534,000. So we're over budget, over cost from last year, but still under budget for this year. And that is for the fiscal year, not the plan year. Any questions about expenses? On to page 5. Supplemental scheduled cash balances. Our bond sinking fund is at 1.8. I will note that we did make an interest payment on December the 1st. That will show up in December's financials, but that was $433,000, so you will see that drop off a little bit next month. I do also want to note that our investment accounts includes long-term investments and our short-term investment accounts. So at the end of the month, I run a project report, and if we find that we need funds to cover our monthly operationals from those short-term funds, then we request a draw of those funds from Synovus, and they'll be delivered the next day. And I would also like to note, that the agreement with Glynn County for the COVID relief funds under the American Rescue Plan Act of 2021. We received our $2 million this week, so wonderful. And those funds will be moved into the R&R investment funds when they've posted to our account. Page 6. At the top of the page are bond trustee reserves, that 15.6 million. The construction funds are money market. That was right. They're invested in money market. I also spoke with Mark Hallam from US Bank, and the cost of issuance for the 2017 and the 2021 accounts are being transferred into the bond sinking as of today, and the accounts will close tomorrow. So that's another $21,000 to close out those accounts. And then at the bottom of the page is a summary, a quick summary of the different divisions on the reserves and the cash.
I just want to point out, investments and trustee held funds are all invested, correct?
Yes.
I think what's noteworthy, we're showing a splost account, we're down to 3.2 million, and we'll quickly deplete that over the next.
We're spending about $750,000 a month on SPOS right now. So.
And that's what we're supposed to be doing, and that's a good thing, and that sends a message to the community that we're doing what we said we would do.
Any questions on cash balances? Okay, on the project report, page 7. Our total expenses for the year thus far on projects is almost 9.5 million. That's an increase from October's expenses of 2.6 million. And we're averaging 1.9 million monthly on project expenses. I reference back to last year, it took till April of 2021 to reach the $9.7 million mark, so we're way ahead in progress than we were for last fiscal year.
You're going to get a big one for the plant for the end of the month, because we just had a lot of equipment show up, so that number's going to skyrocket for.
Sorry, I keep forgetting to do that. Some of the activity, for the most, has been the Project 702, North Mainland, the facilities rehab, SCADA upgrades, meter replacements, the public safety complex. That's 340. That is being reimbursed, and we are currently working with the county, getting a process going that we will send them those pay apps as we get processed.
We'll note, we talked about at the facilities meeting, the final deductive change order for pump station 4003. Close that project out. That's project 703. You'll see the remaining balance in that unencumbered right now is $996,000. That is SPLOS funds that will be freed up to offset the capital improvement funds on 702, the $2.05 million there. So we'll have about $1 million of our capital improvement funds that should be in there, but that if you finish the SPLOS project, those remaining funds can go to offset cost on other SPLOS projects. So that will be reallocated up following completion of that project. Final pay apps.
Okay, page 8 of the project report, of the financials, which is the second page of the project report. I just wanted to give a brief update on the GFA numbers. The project expenses are $3,609,000. That is for current year expenses only, and I'm going to give you total projects on the GFA. The facilities rehab, $5,652,000, and the meter project, $3,719,000. So that brings it to $9,371,000. There was a little variance to that in that a portion, like $220-some thousand of that was one of the projects was SPLOS funds. So it'll show up as project costs, but it wasn't GFA funds. We didn't do the drawdown there.
Understood.
Any questions?
Good.
All right, thank you.
Thank you, Francis. Commissioners, any other business before the Finance Committee?
I've got a question. Going back to the very first presentation after payroll, that, I mean, that number's kind of, I always say they accelerated rapidly on the far right column there. Yes, I mean, I'll ask to verify that, some of those just look surprising to me. Maybe the 10 points up a little masking. Pretty large year-over-year increases, that's not what I would call us giving out, so I don't know, they're associated with hiring more people, or, well, I know this year we've got some pretty, a lot of openings. We're still not disproportionately far from last year, probably.
This, I believe this is based off of budgeted payroll, not actual expenses. So those openings were still in the budget, so I think that may be why that's showing up.
Okay, in mind. I mean, we're up over, you know, basically, I mean, they're at one point, I mean, we're up over 100%, matter of 5 years. 6 years.
Zip? Anything?
Nothing from me, no.
Okay, Andrew, anything else for the,
That's all I have, sir.
What are we doing?
not for this, yeah, that's tomorrow. All right, having concluded all business,